Okay. Right now, listen to this shit. Spit this. Okay. Okay. Right now, listen to this shit. Spit this.
Side of the record. Let's play some turning the record over music. Play.
She's in my dream. Right now, listen to this shit. Spit this. One time for your mind. It work. Woo, woo. Woo. Represent. Okay. Okay.
What's up, guys? Greetings. Get started in a minute or so. Just reshare the link. No sound? That's weird. What about now? Oh, I see you deleted it. Okay. Okay, the link is in the Discord. One sec. Okay. Let's get it started. Are you accumulating level? No, I'm not. No, I'm not accumulating level. One sec. I have a couple things switched around, so I'm just trying to find my way around the desk. All right, what's going on, guys? Happy Monday. Monday is not usually known to be a happy day for anyone who works 9 to 5, but I don't know. It's always a good day to be happy. Okay, so when's the last time I went live? 4 days ago, 5 days ago? Not a whole lot has changed, but we're going to look at BTC. We're going to look at ETH, take a look at some alts, look at stocks, and hopefully wrap it up pretty quickly. I don't want this to go more than an hour, and I do want to leave it open to take some questions. So feel free to leave questions in the chat, and I will go back and look over them throughout the stream. Also, if there's anything that you want me to take a look at, share that in the chat as well, and I'll get to what I can get to. If you're not subscribed to the YouTube, hit the subscribe button, hit the like button, all that stuff. Remember, none of this is financial advice, strictly for entertainment purposes only. And as you can see on the screen, this is in partnership with Bybit. So if you use that link, tradebybit.com, that's my vanity link. That connects right to my referral, and that gets you bonuses. So you're either going to qualify for a bonus. If you deposit your first $1,000 on the exchange, you get 10% back. If you deposit $500, you get the same thing. And then as you deposit more and more, you qualify for larger bonuses. And you're able to use that money to trade. You're able to use that money to offset fees. What you're not able to do is just to sign up with that link and then take the money off the exchange, obviously. Also, if you are someone who trades what would be considered significant size, you will be able to get a reduction in your trading fees. So if that's you, God bless you, and reach out to me, and I will make sure that that is taken care of. As a reminder, I said this during the last stream, this change does not mean anything bad has occurred with Phemex. So I just want to be clear with that. No foul by Phemex by any part. I worked with and was partnered with Phemex for a long time. Still think they're a great exchange, but I thought I was making a decision, or rather I was making a decision. I did make a decision that I felt was best for me. And I think that Bybit, it always has had superior liquidity. That's really important to me. And they also offer options, and I think that that's really cool as well, because it's a pain in the ass in crypto to get access to perps, spot, and options all on the same platform. This is only something that's new as of recent, where they, exchanges are beginning to integrate options onto their platform more and more. But for the longest time, it was like you could trade perp and options on Deribit, but they didn't have a spot market. You could trade, spot and perps on any other exchange, but they didn't have an options market. And I think that it's great that all this stuff is available on one venue. All right, so that aside, if you're interested in any of the platforms, any of the other, or any pieces of software you see me share, then check out the links below. There are some other links also in the description below. If you don't see one for one of the platforms that I am, using, sharing, yada, 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 it's in the Discord. So if you go into the Discord, there's a whole resources section, and you're able to see everything that I use. So whether it's Coinalyze, whether it's ExoCharts, exchanges, and there's a little bit more detail with respect to everything in the Discord that I'm not going to go over right now. All right, so how are we feeling right now? Are we bullish? Are we bearish? Yeah, sometimes people say there's a little bit of a buzzing sound in the background. I don't know what that is, honestly. I have a Shure mic. It's a phenomenal mic. It only appears to happen it's either if someone's listening in headphones or on their phone. I can't recall which one it is, but I know that whenever I play back the audio, I can't hear a buzzing sound, but I'll figure it out. Is Bybit non-KYC? So like all exchanges right now, with exception to Binance, almost all exchanges, they still offer a non-KYC version. So you could access, it's not a version, you get access to the same, liquidity, same products, all of that. But you do get a lower withdrawal limit. But it's still, on Bybit, it's still very high. So most people aren't going to have an issue with just being on there non-KYC. If you KYC, you are going to be, you're incentivized to KYC by getting access to, I think, reduction in fees, higher withdrawal limits. And this is what almost all exchanges have been doing, like I said, with exception to, Binance, which is completely, I think, basically at the level of requiring a hair sample and a blood sample. I think all exchanges should offer, both options. If you want to fully KYC, you're incentivized to do so. You get some perks, but if you don't want to, it kind of speaks to the ethos of crypto to remain somewhat anonymous and somewhat safe in that regard. All right, so we're going to take a look at BTC. First things first, we'll take a look at equities. This morning, I don't know if any of you guys have noticed, obviously equities have been moving inversely to the dollar. This has not always been the case. It's not always been the case that, a strong dollar has meant a weak equities market and a weak dollar has meant a strong equities market. That relationship is only new as of the last year and a half. So anytime the dollar puts in a really strong move, tends to hurt equities, which, crypto trades like a tech stock, I've said many times. So crypto is just a risk asset further out on the risk curve, and crypto gets hurt as well. So there was a strong move this morning by the dollar down. I think Goldman had said something about $100 barrel oil or something like that. I didn't read the exact headline, but led to a pretty steep drop in the dollar, which led to a move up in the S&P. There's all these correlation algos that are trading across all markets, which then led to a move up by BTC. So if we look at earlier this morning in the session, if we look at how the S&P traded, and then we look at, just a simple chart of BTC, you could see that they're highly correlated, right? So there's periods where they're not correlated, right? Where it appears like they're decoupling. But that hasn't been the rule. It's been the rule that when equities are bid, when equities are showing signs of strength, crypto is free to roam, free to show its own sign of strength, which is, it means it's trading as, excuse me, I'm probably a little bit rusty right now. I could tell by just the way I'm talking because the weekend I'm absolutely tired for some reason. I don't know. My little one decided to stay up a little bit longer throughout the night, but we're working through it. So if I have any brain fog, forgive me. So crypto is just beta to the S&P, right? So if the S&P is moving up, crypto is moving up a couple multiples of that, ideally. But we can see this morning they're lock in step. It's been the case as of the last, I think like last month and a half, last 2 months, where there's been periods where the S&P has been putting in stronger moves to the downside, and intraday Bitcoin is held up. And there's, multiple theories about why this is the case. But when things get slippery in both directions, so when we have a firm move to the upside, firm move to the downside, it tends to be that crypto responds pretty quickly. So it's not like Bitcoin is doing its own thing this morning. It's just moving it's moving lock and step with the S&P, which is moving, inverse to the dollar. So I think it's important, obviously, to still keep an eye on the S&P, as that's probably getting tiring, but that is the regime that we're in right now. That is the way that the market has been for, I don't know, who knows how long now. It's been like that for a while. So high time frame, going back just to quote the last stream, bearish bias back under this high, under this composite. So the idea was we had a multi-week composite up here, just over a week long. Let me turn off this music in the background. Just over a week long. Acceptance through that. Our initial targets, as I laid out in a prior stream, were these lows, right? The line of hope that you see on this chart right now is possibly a running diagonal that we might respect. So it's been a long time now. It's been a long time since we've had, since we've been in a bull market, since we've been in accommodative conditions. During the bull market, right, during the last 20 years, the S&P has just grinded upward. So it's possible that maybe we're just beginning to do that right now. And we're going to do what we've done throughout the last 20 years, or last 10 years, more specifically, which is we just continue to march up at, like, I don't know what angle, but we have multiple corrections. They all look like, it's possibly the larger reversal to come. And then we resume course upwards. So it's been the case that that's kind of respected. Our more significant moving averages, a lot of times we've seen that that's respected. As you can see, I have the beginnings of a trend line right now. So I'm just putting this on here to see if we get anything there, if there are any bites there. But that being said, I am still kind of leaning on what I've leaned on for the last, I always quote, prior streams, because I know some of you guys don't follow very tightly along on Twitter. Some of you do. Some of you maybe only watch the streams. But I've been talking about the 200 period moving average, so on the daily. So we put that on the chart. Again, sort of trend follower, line in the sand, systematic trend followers. You wanted to see that the market is able to not only close up and through this, but also, as I said, the monthly composite that we're in. So I forgot what line this is that I have on the chart, but I want to get rid of that. Oh, that's that's a profile. This multi-month composite. So it stands out, right? It's really easy to see where we've had trouble. I mean, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 months now. And we'll just say that for 9 months, we haven't been able to close significantly through this range between, 41, 31 in that case, and 37, 76. Now, we had a test lower, right? But we reversed back inside of there. It's, similar to how you would play a range, reverse back inside of the range after failing to either continue through to the downside or the upside. And you're just looking at trading the range again from one side to the other. So, same concept, trading profile, reaccepting back into value, reaccepting back into a balance area. And you're looking at sort of the same rotational behavior to, I'm drinking, sorry, I'm looking over the chat right now. I'm drinking, what's it called? I think it's called Stumpton's cold brew, or Stumpton's iced coffee. It's just black coffee, but cold. So that 200 daily, right? That 200 daily, we'll just put that on this and put that on. Yeah, it's on the chart. No, excuse me. I want to set this to the daily and then look at it while we're on the monthly. So there's that 200, right? Very significant line in the sand for systematic trend followers. But as I said, a more concrete signal, and it's a late signal, right? Because a moving average it's lagging. So moving average is always going to give you a late signal to enter and a late signal to exit, right? But they are things that you can lean on in markets that trend and trend on momentum. So we're above that, but again, 9 months now, unable to close above or meaningfully accept above the top side of this monthly range. We had brief periods above there. I mean, if we look on the weekly chart, what the max amount of time we had above there was, 2 weeks going back into, this is in August, right? So it's been quite a long time. So if we're able to accept back above there, right, outside of this range, and you're above that 200, and then we also have this sort of running diagonal in play, you have a bunch of confluence at that point that says if you're on the sidelines, right? If you're, an equity fund manager, if you're, an investor who's been out, if you're on the sidelines and we're back up here, then you're put in a pretty nasty predicament because, again, I've said this multiple times, if you're managing money especially and you have a market that begins to outperform and we're up I forgot what we're up for the year, but we're up for the year, beginning of the year, in January, I think we're up 8 or 7%. And, look at over history, how much the S&P returns on average. That's a significant start to the year. If you're on the sidelines and you do not capture was a beginning and ultimately a larger trend up for this year after 2022 or a year like 2022, then you're going to lose your job, right? You're certainly not going to attract any future investors. So if we close through this level, and I'll say it's 4,200, this is very good for Bitcoin. This is very good for crypto. And I think ultimately this means that, as I've said before, I think personally the bottom is in. I think we could test the bottom a couple times, but I think at that point it's clear that in the intermediate time frame that you could write off lower prices, right? So I think you'd be attacking, first order of business would be attacking this high around 43, and then possibly attacking these highs going back up to the all-time high. That's a tall order. That's a tall order. We have to do a significant amount of business before that happens. But that is the area where I think you have to be really bullish. And at this point, you've had, and just to go over something I've said before with relation to crypto setups, if you have some kind of swing failure setup like this, so in this case, let me turn off that magnet because that's annoying. So you had a swing failure above this weekly high. Right? So swing failure above, this was a swing failure there. You have a swing failure here. If you have a setup where that occurs and then the market is able to come back up to that level and accept there, well, then whoever was responsible for the selling and absorbing prices up here, it's more than likely that they're not able to do that the same way the next time around. So a lot of times, if you have a setup like this, let's say that the high is taken, it's a swing failure, and then instead of this breaking down further, the market's able to come back to this level. It's unlikely that does its job in this capacity or in the way that it did prior the next time around. So the idea of a second retest of this swing failure more than likely leads to continuation to the upside. That's what I think. That's what has tended to be the case. So this should do its job, and it is doing its job right now. I mean, that is the bull case, but so far right now, we have bearish price action, right? Again, I said we have this kind of running diagonal that, you could keep an eye on. But for all intents and purposes, this range that we re-accept back within, if we're going to say that the pattern repeats and that this swing failure is, we're right at that 200 too. If we're re-accepting back within this range, right now where we're at, is probably your first target, midpoint of the range. But if we accept back underneath that 200 and we have this swing failure behind us, I think that you have to look at these lows again. And again, as I said, I think the bottom is in the sense that we have a large zone that's going to become the bottom. I don't think that it means that you don't retest these levels again. I don't think it means anything like that. I just don't think that we're looking at 3,100 in the S&P or 3,300 in the S&P. I think that we're in an area where it's going to be the bottom, and we have obviously a good amount of work to do. So this is right now, this is a wait on BTC, because if you start losing significant levels in the S&P, I think that BTC is going to start being a lot more responsive to this, where it's been able to shake it off. I said this before we broke down, and this was, I'm not trying to toot my own horn, but this is back up here. I had said that it's never a sign of strength. It's always a lag. So when BTC looks like it's showing signs of strength and the S&P is beginning to break down, a lot of times it's just because people are, holders of last resort in BTC. So they are not quick to respond like Legacy would. If you have a tech stock that's very correlated to the S&P and the NASDAQ's getting hammered, or very correlated to the NASDAQ, and the NASDAQ's getting hammered, it's very unlikely that you're not going to see that tech stock respond, unless it's got some kind of idiosyncratic, idiosyncratic strength, right? From a fundamental standpoint, it's very likely that you see things follow the benchmark and follow the index. Crypto's one more step disconnected, right? It's not, we do have algos that trade crypto around legacy, but it's not as connected as, something on NYSE trading around legacy, right? So something on the stock exchange trading around the S&P. So when we had weakness by the S&P up here, and we'll just throw a chart on, and Bitcoin was holding up. One sec. When we had the S&P making lower highs and Bitcoin is still fighting towards this 25 level, I had been saying that crypto is not showing signs of strength. It's just lagging. So I forgot what I called it, and I don't know if I mentioned this on Twitter or if I just say this in a chat. I call it a generous lag, because it means that you probably can still short BTC with a little bit more certainty. Because when the S&P loses a key level, it's the same way as BTC losing a key level, but you're going to have obviously a little bit more momentum because you have certain parties in the S&P that are, I'm saying the S&P a lot, they're less price sensitive. They just have to sell at a certain point. If they're a CTA, they're going to be selling based on just, again, systematic. They're systematic. So when they start unloading, they're going to be unloading, right? Because they've received their signal, and it's not like it's, context dependent. I don't want to oversimplify that because, you have different CTAs, but just consider when the trend changes, they're selling in the direction of the trend the same way that they're buying in the direction of trend on the way up. So BTC, high time frame. And again, just reiterating some things from the last stream. Resistance is resistance until it isn't, right? So I think ultimately we're going to come down and test this 20 region. I said this the other day. I think we could hit 25 again before then. This kind of looks like, so big picture, I think we have more of a correction. But I think this kind of just looks like this correction back here. So if you look at prior structure, in like ETH and BTC, the most recent structure, there's a little bit of similarity between what we have back here and what we have over here. A lot of the times, the mistake I think that I see on like social media and other places as well, chats, is that when people say, when people become bearish or bullish on BTC, they always assume that it means it's going to correct in a short time frame. It's going to revert now. It's not going up anymore, so it has to come all the way back down right now. Market spends most of its time consolidating. So if this was the beginnings of a big trend, or if this is all we got for some kind of rally that we've had in a bear market, it's more than likely it's going to take some time to distribute if it's bearish, or if it's going to reaccumulate if it's bullish. It's very unlikely that, and it's actually more bearish if the thing just continues to go up vertically. And in this case, we're at resistance. So 25, I think if we accept above 25, so I'd mentioned that I think you could get something like this, and then this is very short-lived, right? You can see that this is a little bit of a longer consolidation, shorter consolidation, right? The pullbacks are coming a little sooner. So if this is truly going to have a larger correction, if the spike up does occur, this one should have a much shorter period at the high. If for some reason, let's say that, this breaks above 25, one sec, and you get something that starts hanging out up here, sells back under 25, and then is beginning to base out, then that's your acceptance sign, more than likely. And then you're looking at 28, 30K. You could sort of see on this chart right now that this area is a low volume region, and it's kind of like that little gap right there. Period of value right here, right? Period of balance, one-sided imbalance move, and then we started establishing value and ranging again. So if you accept into this level, it's more than likely you move pretty quickly through there. So if this is bearish, right, and we do pop up above 25, a bearish move above 25 is going to be something that's kind of exhaustive. Very quickly we see that it begins to lose its footing. And if we do get the correction back down towards 25, it's probably, if it's bearish, it's going to happen very quickly, right? Versus, let's say we spike up above 25 and this thing, sees a bunch of sellers come in funding goes negative, and we're still hanging out above here for, a couple days at that point. So that's high time frame. This is contextually the best area to sell on the chart, right? As close as possible to 25. It's contextually, it's the best risk reward, right? Because again, if you're above there, this is the closest area we are going to get to resistance, right? Next major area of support is probably around mid-range. So it makes sense to take profit up here. It would honestly make sense for people if they wanted to even short. Not saying to do that, but I'm saying I could understand that being justified, or rather that would seem justified just because your invalidation is so close. Low time frame, we have two ranges. So we'll go to the TPO chart in a second. So again, to reiterate, I think this kind of just looks like it's possibly doing this again. The initial part of the low, it's a good amount of similarity between this move here, the overall cadence of this move. So, we have one move up, long balance, pullback, smaller move up, shorter balance. I think you're probably looking at a third move up, and then again, an even briefer period of balance, and then we'll see if it either accepts or if you get the reversal. I think it's a much more obvious short if we do spike above, get that shorter period of balance, and then start accepting below these highs again and have some kind of swing failure. So whether that's, something like this, where we grind up, pop up, and then have a failure that starts accepting back below. But I think that that's definitely something that I would look to short if it happens that way, right? If it happens as I would want to see it happen. Right now, though, like I said, we have two periods of bounce. So 1, 2. Now, this composite up here, there's two areas within it that are kind of separate. So we'll go to the TPO chart, point that out. So you have this composite up here. So you can see that there was a bunch of value overlap up here. And then as the market broke down into this POC in this first pullback, started forming another composite. I think that from a long standpoint, if you're not longing on this dip already, I think there's a clear long if we start accepting above, or rather I think that the likelihood of this occurring is much more obvious instead of us failing right here. So we're at 23.3 right now, but if we're able to accept into this composite above that 24 sort of naked point of control, it's right around where we rejected the high of the day. If we're able to trade back above the high of the day here, I think you end up looking at that naked point of control around 24.664. So if we're breaking above 23.9, I think there's probably a quick trade back up to that point of control and then back into this composite. And then, yeah, you're probably, again, putting in that larger move up. Where we're finding footing right now, so where we found footing, is back within this value area of this prior composite. So if you take, I think it's like 17 days. If you take 17 days worth of profiles, and I think I still have it combined. Yeah, it is. So that range that we built, that's the value area high, that's the value area low. And all we did was accept back within there into this gap and fill that out. So we traded from the high back down to the low. And our POC was right around where the POC for that structure was. So where the most volume and most time was spent in both cases. I think that's actually in both cases. Yeah, so there's your volume point of control, the highest point, and then your TPO point of control was right around 22.982. So that was right here. It's kind of, you could see where that's basically where we started basing out. Short setup, honestly, if we start trading, I think ultimately what you want to see is the top side of this value area hold. So if we're looking at this basing out and putting in another leg up, similar to this, you could see how sort of this structure had value overlap right here. Then we started trading above that value and holding that level right there. So price drove up, POC trading higher, buyers getting aggressive towards the highs, and we traded and held above that little range we created. If we look at like this structure right here, you kind of have it. It's a little bit messier. Value is beginning to migrate higher. But the only thing I guess I'm worried about is, I mean, it's kind of messy. It's not that big of a deal. If you're long for this next move up early, you want to see that this this 23.3 level holds. So this is a prior value area high of a, an 18 or 17 day long composite. If you start trading below this low, one sec. So after this low was put in, so after we just took, maybe this is the high of the week, right? After we just took today's lows, if this doesn't resume here and instead starts trading back in this composite, I think that you're looking at tagging those lows again. So a failure here, so something like, maybe this is possibly happening right now. One sec. Got to get good at these drawing tools. So a failure here. Shit. So we bounced off yesterday's POC, filled out a little bit of that distribution. But if we start trading below yesterday's POC, below this low, see they're kind of lined up. So something that continues to break down here, again, probably trades back to that 22.9, was it 22.7, the lows of this structure. So also be mindful, if we have a spike up, look for signs of failure and a possible lower high to be made before this structure is filled out. And then maybe you have another roll back towards the low. This was pretty aggressive selling. Looks like, you just had on both Binance and Bybit. You had sellers, and this is Bybit. This is Binance right here. And this is Bybit. As soon as we broke up this morning, initially on Bybit, of course, you had people selling this breakdown. So selling this consolidation right here, open interest going up. As soon as price began to squeeze, flushing some of those out. But as soon as we broke up towards that 23.8, 23.7 level, a bunch of longs came in. And we basically just flushed them out. And I said this in a stream, in the last stream. I said we kind of just like getting OI to these extremes within this range. So let me change the time so it fits. So this is all we've been doing. Just flushing out OI between these levels. Right? So get longs aggressive, get longs aggressive, get longs aggressive. Right? And then in this case, this was shorts down here. But prior levels, longs, longs, right? Longs. So now we've just flushed them again. So I would honestly be careful shorting this right here, assuming this is the breakdown, because all we did was just, again, flush out another batch of aggressive longs. And it has been the case that we've just reset this open interest each time and then continue to do the same thing. So above, what's the level? Above 23, we'll say above 2300. Not interested in selling this because I think you can just push up again from here. Accepting below today's lows, yesterday's POC is a good amount of confluence between there. So accepting somewhere below, let's say 23.2, I think you probably can get a pretty, not you, but I think I probably would get pretty aggressive selling into something that ends up coming back down here. So quick scalp. It's not like it would be something to really hold on to for too long. But so far, failing at the underside of the structure. I do think that, I don't know, I think that people got really bearish at the beginning of this correction. I think the timing is just wrong with that. I think ultimately, I think we do come back down and test this structure. But the way people flip bearish across the board, just, unanimously, for crypto as a whole, for this entire move up across the board, I don't know. It didn't strike me as something that would lead to continuation. It's rare that you have the market, that convinced as a whole that of direction and then ultimately end up being right about it. Let me just look through the chat real quick. So this move up, compared to the last one, this was a little bit cleaner. So you had, one sec. Again, you had like 3 days of value overlap. You had this swing failure at the low. So 1, 2, 3, a bunch of value overlaps, clean composite. We end up trading down through the low, okay, taking that low, and then had a very strong move up and out of there. So very impulsive move. This ended up being, this is where those shorts were squeezed out. So if we look back down here, for one, spot started aggressively buying. It's right down here. Spot started aggressively buying, but you could see funding began to go negative. Your open interest started to rise into that swing down here. So that was clean. And I think a bit more obvious than this one because it's very unlikely that the market is going to just consolidate after a move like this and then roll over without putting in multiple attempts towards the high. So as I said, that one was clean, whereas this one it's a little bit messier. You know, we haven't really had, I mean, you had a strong response down here. This kind of looks like it would be the opposite setup, right? You had a strong response in the beginning, not much value overlap. So the opposite setup was we had a composite formed, then we swung failure. We had a swing failure at that low, and then squeezed out those sellers. Whereas this it's kind of a drift up. We're following equities right now. The only major rejection is the opposite side of the structure. So it's not like we had a major rejection at the low besides this one. And when we covered that, opposite of that other low, you know, just keeping an open mind. So maybe you have something that, again, puts in another attempt, but ultimately fails and accepts back within this range. And then you have a much more impulsive move down. And from just a basis and funding standpoint, at this high, where's Coinalyze? Oh, I labeled some of them. So at this, at this low, it's just been the opposite case, right? A brief period of negative funding, wipe some longs down here. Good amount of long liquidations, but for each move up again, it's been the case that longs have been getting more aggressive. Spot CVD buying though, but it's not abnormal for spot to pick up and then sell, and this just to be a brief dip buy. So not the most confident looking. I mean, as far as structures go, I'm not that confident in this. I mean, you're building value higher. We didn't quite put in the kind of low that I would want to see. A little bit more consolidation, a little bit more overlap, and then a spring out of the low. Instead, we have a slight drift higher, and we're not exactly holding the high volume levels the way you would want to see. So instead, you know, we're right around it, so it's not that big of a deal. But our POC, we're trading under right now. It's possible that we've put in the high of the week. So normally you look at a Monday open getting returned to. That would mean that we trade higher again. So maybe that is the setup. So as I've gone over this before, Monday opens are normally returned to on Tuesdays. So if we look at today's open, this is today's open. Make that a little bit more obvious. Here we go. So we traded above. You have a decent wick on the day. But if this was going to follow what's happened in the past, or what statistically has happened more frequently, quite often actually, then what you would get is Tuesday, for trading below this, what the implication is rather, that on Tuesday, maybe we get something that offers that short setup, trades up and above Monday's open. We already have the wick on for the week, though. So it's not like it's a better setup is when there's not much of any kind of activity on the other side of the open for Monday or the weekly open. So it would be a candle with no wick, right? A weekly that starts off, has no probe above the high or above the low, or above or below the close, or above or below the open, depending on which way the market has moved. But then comes back on Tuesday to clean that up. So maybe we return to it on Tuesday either way, put in some kind of lower high structure, and then you have maybe a little bit more confluence to take the short setup for a further breakdown. Again, if it trades back above today's POC, or back towards today's value area high, rejects again at today's value area high, you have a couple things that might line up as far as confluence. Let's get rid of some of this stuff. It's your weekly VWAP. So again, what did I say? As far as a long setup goes, because you don't want to buy necessarily, you didn't want to buy this high like a lot of people on Bybit did. That is last week's VWAP, right? Acting as resistance. So that long setup, like I said earlier, it looks like there are two composites. So you have composite right here, and then a range higher. So better long setup, especially after this rejection, if you're above that and you're above last week's VWAP, which is right around 24. But what I said in this was if we get back above today's high, which is right around 23.9 actually. So if we're back above 23.9, 24, that puts you above this range before the breakdown, above what is ultimately, I think that's probably the value area high of that composite. Let's see where that, it's right there. Yeah, that's 24.94. But that general region, right, puts you above last week's VWAP, puts you above that structure. And then, yeah, maybe you get that overthrow back up towards the highs. But at least then it's a little bit more defined by context and positioning rather than just basing it off structure. Let's take a look at ETH. ETH BTC is still in the same range, going back all the way to June. And ETH is, compared to BTC, BTC is right at what is ultimately, I think, the most significant high time frame level on the chart that we've had to come into contact with in, almost a year now. But ETH is not even at, if you could, this is probably, I guess you could say that this is the range high. That kind of writes off the high of this sort of 1940 weekly highest close going back to August. But I guess if we do this a little bit more granularly, and we just look at, where we've spent the most amount of time, probably lines up on the daily too. Lows, your highs, lows, deviation probably, and then extending that forward. I guess it's kind of at the same level. But when I look at ETH, honestly, you can look at it both ways. If this, again, same as BTC, if we consolidate through these highs, so, this is for ETH is right around 1750. If we consolidate through there and accept through that, then you could look at, you start targeting above 2K. But there is an argument if we break up and we start pushing up and we're able to stay up there, that you're grinding against that resistance, and then at that point you might want to just buy into it. But part of me also sees this structure in this, but this one just having less energy behind it. So I mean, if we look at the momentum difference between this and this, just looking at something like RSI, the momentum has definitely come off a lot. So RSI holding those upper extremes. And meanwhile, this has kind of just been a slow drift. But there's the saying, don't short a dull market for a reason. But that's when a market is just consistently grinding up and it's more along the lines of being in a bull market than a bear market. But a good argument to be made that, if we are at the lows, this is where the bull market would start, right? Just a matter of when. But I've gone over high time frame why ETH actually looks like between now and the end of the year, any buying probably is rewarded in the next 2 years. I've gone over where we are within relation to the high, how much time has passed. The high, this high to where we are. And if you say there's similarity between those two, you still have some time to go, right? So, I mean, either way, I think one of the most important things that I would want to convey in just every stream moving forward, it is my opinion, right? So don't take this and run with it and go, mortgage your house. I think that as far as for my own positioning too, I've been buying spot ETH. I've been buying spot BTC. I said I was hedging around, this was a couple days ago now, but trying to hedge around 25. But that is because I think we could spend more time ranging. But I think that for most people, buys between now and I want to say the summer and Q3. I forgot what I definitively said. I think I said Q4 we're on the way up. Like everyone's going to know that, it's going to be obvious at that point. But I think that buys between now and then are rewarded, like I said, with multiples over the next couple of years. So I think where we are right now, I think is a pretty incredible area from a risk reward standpoint for the next few years. So what you don't want to do is like overly focus on the micro. If you're a trader, you could trade around core positions, but I think that, most people are going to be trading themselves out of things right now that are going to be going up quite a lot in the next few years, but they're, again, maybe they're going to be going down for a little bit in the next couple months. So I don't think that, I want to get shaken out of positions right now as far as spot. I do tend to try to time the market more than the average person. So, I'm going to hedge. I'm going to try to get more BTC, get more ETH by doing that. But I do think that, the thing that I'm, I guess, most firm on is that 2024, right, 2025, we're much higher prices. Yeah, need sleep. There's not a whole lot going on, honestly. All the alts that I covered during last stream, I'd gone through a run of alts, and it's just most of the alts are at high time frame resistance, and there's a couple of them that are through. So just to touch on them real quick. So DYDX, DYDX, whatever you want to call it, this is still sitting above, from a contextual risk reward standpoint. If this was back below this low, it's a clean short for me, right? But it happens to be that we're sitting above it. We're holding it now for 1, 2, 3, 4, 5 weeks. So, it looks like acceptance. There's been a lot of times where, and I don't want to buy something like this unless it's on the low time frame. So intraday, if I see a setup like this, a lot of times it'll lead to a little momentum play. But sometimes in the high time frame, you get a really clean setup like this, and it's a trap. So you end up with something that looks like, oh, this is a diagonal resistance. Buy that break, and then we're down here, and it doesn't do this again for another week or two. So I want to be mindful of that, but mindful of that if you don't want to be over positioning yourself at the high of anything in this anyway. You want to think, I think, mostly about how this structure is holding the top side of a much larger structure. So I wouldn't get overly aggressive, like buying into what you think is a breakout. I would focus more on the fact that this is possibly a much larger breakout, and I would just want exposure here. So as long as this holds, in my opinion, it looks really good. And someone said, a friend said, this is like, the DEX, the Coinbase of DEXs, which, for some people can mean a good thing, can mean a bad thing. But price-wise, it looks really good still, right? While a lot of other things are beginning to fail, OP, similar as well. Very limited price history. It's in new price discovery. Everything is price discovery. But it's still, it's kind of like hanging out towards those highs, and you have a little bit of a grind taking place. So this DYDX and then SNX, honestly, which is, probably one of the most well-known pairs connected to OP. This also, showing, I think, signs of strength. So if you look at this on the high time frame, there's a little bit, it kind of reminds me of this back here, but two completely different contexts, right? But still, the idea is we're back above, and this actually extends back here, back above a very significant area in local market structure. It's not local because it's a weekly chart, but no rejection really. The initial rejection, we're kind of floating back up towards that now. And it looks like you have a little bit of a grind upward that's taking place. So this, I don't know, to be honest, these are the only pairs that I'm really looking at right now. Everything else is either at resistance, rolling over, or just not really compelling. There's been a lot of shuffling right now, or the last couple months, honestly, of narratives, and you could tell they're beginning to speed up. So I think there's less juice right now, honestly. And that kind of coincides with my belief that BTC is ultimately going to correct more, regardless of whether we get another spike up. Even if we look at like total market cap for non-BTC, non-ETH, there's not a whole lot going on. So you just have some shuffling of money between alts. There's rotations taking place still, and there's probably still enough money for multiple rotations to take place, but we're no longer in a situation like we were in January where it was a rising tide, right? Where everything was going up. So that's important. STX, I shared thoughts on this. And I was looking at, so I don't really know a whole lot about STX. I'm never a fundamentals guy, but what I do keep an eye on are things that have put in extreme moves, right? If it has ugly fundamentals, right, or tokenomics even, and we have an extreme move up, then I'm probably going to be a little bit more aggressive about shorting it or looking for a possible short setup or just keeping it on my radar. I think that there's been a lot of hype about this, but I don't think that it's necessarily, I don't think it's really validated in truth. I think that it's just the market has been looking for continued narratives and things to jump into. And I think that since things are blowing off steam a little bit, or rather since that losing steam, I think that this is more contrived than anything else. From a positioning standpoint, I think it's a little bit more obvious. So if we go to at STX, so I've seen this before and I've gotten caught on the wrong side of this before. So, the market is quite privy to extreme positioning, extreme positive sentiment, extreme negative sentiment. And a lot of times you see that people just reflexively take the other side of that. So, we have a dip on extreme, negative funding. Did I say sentiment the first time instead of positive sentiment? I think I meant to say funding instead of sentiment. They're hand in hand, to be honest. But, we see a dip and the market is dipping on, very negative funding, annualized ridiculously, where if the person held the position for a month or two, their position would be eaten up by just that. And you look at that dip, you look at that position, and you think this is a great long. We're going to squeeze these shorts, right? The opposite, when the market is, bounding upward, you have obviously, hopefully, a little bit more reason other than just funding, but confluence of reasons, and then funding is really positive, and you're thinking, okay, this is crowded, this is going to roll over. Both of those reinforced by some kind of extreme move in open interest as well. The last time that something extreme happened was with APT. So funding was really extreme, similar to what STX is right now. STX is like 21 basis points on Bybit, which is insane annualized, right? Paying a lot of money to stay short. I think that what ultimately happened last time was this happened at the high for APT. Same funding, right? Very extreme value. And I think people jump in long to obviously capture that and get paid that. And it sets up a crowded trade, right? I think it ultimately baits longs in, anticipating a further squeeze, but this has already put in quite a considerable move. And what it looks like is, honestly, the funding is really negative on the way up, and it has gone increasingly negative on the way up, along with open interest going up. But spot isn't really buying, and it's not the case that spot is buying and perps are shorting. It honestly looks like there's not a lot of spot buying, right? But there is actually a lot of aggressive buying in perps, so the futures are being bought up. But there is someone that is providing a ton of liquidity up here. So someone is getting filled for a very large sell, or either to, in this case, would be to, it could be to close out, right? Or this, no, open interest going up, so it implies one side each. But either way, it looks like the perp might be trading under, this is just my opinion, might be trading under the spot price because there is so much overhead pressure. So regardless of, a lot of buying on the perps, there's someone that's absorbing all this. And because of that, the markets are disconnected and there's a big seller up here. And yeah, they'd be in really poor position if we got above them, right? But so far they're in the money. And I think that this has happened. This happened in APT as well, where it looked like, and I'll put the, so this is predictive funding, but I'll put the actual funding on. It looked like, oh my God, this is going to squeeze a lot more because, funding is ridiculous right now. It was, 25 basis points or something like that. It actually got to up at this high. So look, it's extreme up here the same way that STX was, right? So funding actually got to, we'll just put on Bybit, for example, we're the home of the apes, right? Love Bybit though. On Bybit, it was 28 basis points. So that is basically the same value that we're seeing in STX this morning. Gets up there, extreme negative funding, and everyone's thinking that this has to be in this case, it has to be a long still, because we're going to squeeze those, shorts out. And you can see that in that move on the way up, as funding is going up, more importantly, as we're going, so price is moving up, funding is going negative though, and open interest is going up, right? And meanwhile, CVD was going up for that portion too. So what ultimately was the case is this is probably, again, someone just sitting on the offer. So someone providing a ton of liquidity. And because of that, there's a lot more sell pressure passively on the perp than there is in the spot. So it looks like people are aggressively shorting this and possibly going to get squeezed, when reality was they were aggressively buying into one large seller, right? Or a series of large sellers, or a bunch of large sellers. But either way, they were in good position up here. And they didn't have to worry about paying a crazy series of funding payments, because that baited in a bunch of longs that ended up closing out, ended up arbing that and switching that that value, right? So we went from extremely negative to positive very quickly. All it took was, from January 26th to January 30th. So a few funding periods for that to switch, right? So they lost money, but from that, price ended up dropping, 33%. So let's say they paid, and they're probably well capitalized, so it's not like it's going to eat up their margin and they're going to be out of a position, but they made a pretty penny, right? So just imagine that they were filled for a $10 million position. They made $3 million and they paid, a fraction of that in funding. So that is something that I think is kind of it's it's reflexively something that might make people think it's still a long because you got to squeeze them, but that marks the high. Hopefully that all made sense because it makes sense to me. So another thing about Mojo, you might have been alluding to this. I think they're listing, SNX is listing something like 15 or 14 pairs. And I think the DEX narrative, so I think anything related to being a DEX, I don't think that's gotten the true attention that it deserves, honestly. With everything that's happened, I don't think it has. So I don't think we've seen the extent of a major DEX bull market. So with things that are related to DEX, DEX pairs, DEX tokens, I just don't think we've seen enough attention for the amount of attention I think it deserves. Considering everything that's happened with sexes, and listen, I'm someone who trades on a centralized exchange. I think there's a place for them. But I just think from a narrative standpoint, I don't think this market has favored DEX tokens enough. But I think I'm going to wrap it up, guys. It's around 1 o'clock. Honestly, I want to hop on the stream on Monday. Monday's boring. Mondays are typically pretty boring. From a statistics standpoint, let's see. Let's go to Amber Data. Just log in on a different screen. I think Mondays have been pretty crappy. That's not where it is. There we go. So day of the week, let's say just beginning of the year. No, that's 2022. What's going on? Why is that? Oh, okay. Actually, yeah, it appears that I'm wrong. Is this supposed to be? What is going on? Let's see, date range. Yeah, I mean, Monday doesn't seem bad. January was a completely different story. Okay, so this is January and this is February. It's the beginning of the year, so it's not really showing a lot, obviously. Normally I'm looking at something like this. But you could see that in terms of weekly performance, I mean, Mondays are the third worst day of the week, along with the weekend, right? So bulk of the activity happening between Tuesday and Friday. And the market's just in a place right now where it doesn't look like there's a lot that actually is on the table. So I'll go live again on Wednesday, though. So Wednesday, hopefully it'll be pretty exciting. Wednesdays have been decent. Tuesdays have been good. Tomorrow I have another tattoo appointment all day. So I got to sit in a chair for 8 hours, but I have an audiobook. So that should be decent. But I think that'll be it. Yeah, I think you're bullish on SNX for a good reason, honestly. I mean, it looks, being that the market is, a lot of things are a lot of things pumped for no reason, right? They pumped because everything pumped. But I think, I honestly, I don't want to make anyone FOMO, but I think that you can consider, this is definitely going to make people FOMO. Okay, so I think the bottom is in, right? I think that the bottom is in for all intents and purposes. So what that means is, can we retest, 17, 16K again? Absolutely. I think the general bottom is in. This goes back, I said in June, I think we're going to bottom in Q4 of this year. And then I think we're going to begin, I think I said you could start dunking on, what did I say? You could start dunking on Legacy or TradFi in summer or Q2 of 2023. What I said in the beginning of the stream about the end of this year is that it'll be really obvious at that point. If this is the bottom, what does that mean? This means this is where the bull market starts, right? So that doesn't mean for everything. I have a tendency to believe in that this gets proven wrong in the bull market because everything gets bought up. But if you think that this is the start, the bottom is where the bull market starts, right? I think you're going to see the projects that deserve the most credit start to get bid up a little bit more aggressively. So I would focus on things that are showing the clear signs of strength right now, right? Between now and, Q3 of this year, because those are the things that are probably going to run pretty incredibly during the next bull market. And are we getting another bull market? Yeah. I think that people are getting way too wrapped up in the macro and just forgot that the macro is part of markets, but cycles are part of markets as well. And it's not to say, this can't last for a while, but we've had markets move up in high rate environments, in high inflation environments, or elevated inflation environments. Obviously, you want to have inflation down, but for anyone who's like thinking that this crypto topped as an asset class, I mean, it's the beginning. It's only been how many years now? You're closer to the beginning than any other asset class. It's a very unreasonable take. There's a lot going to change, absolutely, but the winners that, maybe they get, and listen, maybe things get selected by the SEC, and that fucking sucks, right? Maybe the SEC picks winners. Maybe it picks the exchanges that it wants to live or wants to live. Maybe it picks the ones that end up being around in the next 10 years, and it's the one that's responsible for that, right? For your ability to select, right? You're picking from a pool of things that they're saying is okay. And that fucking sucks, right? I think either way, that in the next 10 years, that, yeah, maybe they lose access compared to other regions, but I think that anyone who's in crypto now is rewarded over the next decade, right? Again, there's survivorship to everything. So if you're in the right pairs, obviously, if you're in the wrong things, you'll just be, I think, hopefully, things that don't deserve credit end up dying off, right? And that capital is moved to things that do. But again, all my opinion, not financial advice. AI is going to be huge, as Ross just said. It's going to be massive. I mean, listen, I'm not a technocrat or anything like that. Yeah, I like tech. I like to buy the newest tech. I like to try the newest tech, but I can't tell you anything about it really most people are really confident in what they say about like tech because they use an iPhone, right? I can't. I use ChatGPT and I think it's amazing, but then I watch people talk about it and they're like, this thing is fucking, it's not impressive at all. And I'm thinking, well, I mean, it's impressive to me for really simple reasons. And I could extend on that where I think this is going, at least somewhat reasonably. And things are going to get really wild. So there's going to be, I'm sure there'll be an entire bubble around just that. There absolutely will be. I think it's just it's like every other industry, right? So any other, like, I shouldn't say any other industry, any other really romantic, hyped up industry. So that's it, guys. I'm gonna wrap it up. Hopefully that was clear. Again, a little bit of I don't know, my little one, her name's Addison. She's going through like leaps and growth spurts. So, they change every other week. And I don't know, I can't put a finger on it, but my sleep app can, and that's all that matters. So that'll be it. I'll see you guys again on Wednesday. I'll post the link in advance, and I hope